Hello everybody, I'm Giuseppe Basili, also known as the FIB Stalker. You can find me at FIB Stalker and on Twitter and on fibstalkertrading.com. So in this video I want to review for you 7 market all related to the euro, and I will start from the euro dollar, which is what you see on the screen here. On the weekly time frame, we know this market has hit a long-term target a few a few months, several months back at the beginning of 2015 here, and we know that if this market was bullish, we could see this market retesting the 122.34. However, at the moment, this market is moving laterally and has been moving laterally for more than 1 year here, 1.5 years. What is important to notice here now that this market might have started its move lower again, and this market failed the all the way halfway back here, so didn't find participation from long in its move higher, and it's now coming back into the area 110.73. This area could hold temporarily, but there is a possibility for this market to just continue lower. So there's not really a lot of information we can get from the weekly. What I will say on the weekly is that the trend following system, that money has been actually monthly, on the monthly has been actually opposing resistance to move higher, and the the daily, on the daily time frame, we can actually look at the measure move that held for a few weeks. We saw that participation 111.40 area here that gave hopes to long to bulls here for a few weeks, and this level was tested 3 times, 1, 2, and 3, and there's a 4th time here, and then the market actually pierced that level. So there is a very real possibility that this market not only goes back to the area, and that already happened today, actually the 50%, the 110.74, but this market could actually continue lower if it breaks the 109.51. Okay, now in order to see whether bulls would be able to control this market, of course we need to look at how this market is going to behave in this area. And of course there are also shorts that are trading this market, and although the areas were not respected to the peep here, we saw anyway participation. We saw initially this 112.73 not being participated here, and then we start seeing participation progressing to the first target. And if we keep seeing dollar index strength, this could actually continue lower into the second target and possibly break the level. So it appears this market has started again move into parity here, into lows. And if that's the case, and if the market gets into that second target and pierces, we're gonna trade this market with extension shorts, lows to lows. The euro pound has been, on the other hand, very, very strong here, and actually there was an agreement from that money here, and we saw this market trading in extension. 0.7596 was an extension after a very strong move higher, and we can see the pace of this move is much stronger than the pace with which this market got into previous lows. This level was tested twice. The 75.96 was tested twice at confirmation that this market was indeed moving in extensions. If this market actually will put a correction here, we know that a correction could be pretty deep at this stage and could come and bring price into OED 630. However, this market keeps moving higher, and then we look at the trend following model here, we can see that the weekly has been supporting this market. In fact, it is even being it has even given an internal measure move here of this large move higher, which could be identified in this specific case using one of the extensions. This market has used a previous highs, so this was a jumping extension here, which was aligned with the previous highs we show here. So this level could only be identified after the fact, but nevertheless it's important because it gives us information where this price could be pushed before we see a reaction. The second target 91.79 has not been tested yet, so that could be tested. And after that we have two levels that we have to watch. The first level would be on a weekly level, which is highs to whatever high is printed, and the level would be an inner measure move here from high to high. This is also possible if this market keeps the separation. Okay, so moving then to Euro Swiss franc. Euro Swiss franc obviously has not been as strong as the US dollar counterpart, but and there are a number of reasons here. As you can see here, there is a monthly dump money area here, value area, that is actually pushing this price lower. However, we saw a sequence of measure move higher, very much similar to what we saw in the US dollar counterpart. And in June, with the Brexit, we also saw a further confirmation of this long, at least so far. In fact, there was participation into this area that actually was not as strong, as strong as before, and was not capable of bringing price into 114.27. And again, the reason is there is a monthly bear value area here is pushing price lower. And besides that, we cannot see a lot in this chart, so we have to move to the daily chart and try to understand what's going on there. Now, so the weekly chart is actually, the weekly participation actually supporting this price higher, and then we saw also participation around the 50% here. We saw this at the end of September here, but that participation was not capable of pushing price higher into previous highs, into this 110.90. So if this market could have started a correction here, unfortunately the levels on the downside, on the bears, are not very clean here, due to also the presence of these big tails here. So the only other level that we could use is when we eliminate the tail, and as we can see, this gives us, if algos indeed are attached to this high here, it gives us an area where we saw multiple times of participation on the downside. So this makes much more sense here, and this could be the culprit and the reason why this market has started, or could be starting here, a move lower. So there are a number of models or different models that indicate a possibility there. In fact, this market has lost the 16 minutes value area there, so this could be an opportunity to trade this market on the short side. In a way, also in line with what we are seeing in the US dollar as well. So short in this market would actually have a potential target around the previous support here, 108.10 to 30. So let's continue with the euro versus Australian dollar here, and again we look at price on the larger time frame. This market actually had participation back in 2014, 2015 in at the 1630 area here, which is the all which is the short, and this market has potential to retrace all the way into the previous lows here, and that's what we are currently seeing here. Now, in the last few months and last year, we saw this price participating from the high last year, from the anchor last year. We saw it participating in May and June to this inner measurement 154.89, which kept pushing this price lower and has a target at 139.37. In fact, that's a long-term target for this market. And we also saw an inner move here, which actually took place a few weeks back here, and as you can see, the bears, the weekly bears are aligned with the move. However, the move has not developed quickly because there are monthly bulls, so actually that money that is actually pushing this price higher. Now that this market is getting out of an area where there's typically participation from monthly bulls, this market is actually started accelerating and is actually trading in extension here after the move we saw 3 weeks ago, and this market has traded at the middle of last week. It has traded the 147.63 daily that is actually pushing this price to previous low, and potentially is going to break those lows as well. So that's what we're seeing this market moving. In this market continuing extension, we'll keep trading this market in extensions because we have a number of measured move monthly, weekly, and daily, which are all pushing this price lower. So the most recent move has found participation and has the potential to bring this price well below current prices. That's not an excuse to jump on and take a position in this market, but we could see this market moving into 141.41. The position in this market would have to be taken when the opportunity is given and not after, because the risk obviously increases. When we move to the Euro Canadian dollar, the Euro Canadian dollar has a similar development here, with the only difference that this market has been moving laterally rather than with a clear downside bias, and we saw this market piercing the area of participation from monthly bears here, and then the bulls on the other hand were not capable of initially push this price higher, but they were not capable of they pushed this price higher here, but they were not capable to maintain those prices, and so this market has been moving laterally. Now what we're seeing here for the first time in the last year and a half, this participation at this 148.18 on the downside, and that happened, and it's been confirmed this week. There is still an area of potential support from bull from this bull value area here from that money, so this market might not push quickly lower here, but below this area the next level of support is going to be the 138.58. Okay, so apparently the move higher in this market has ended for now. Euro New Zealand dollar, it's a very technical market, and when we remove the trend following system here, we see that this market has reacted to potential extension low here, and it has been very technical. In fact, it has responded to the level with a sequence of measure move on the weekly time frame. The price got participation 171.93, went right into that first target, then again where profit taking took place, and this move lower also somehow initially they were actually opposed by the dump longs here, and that's the reason why this market has bounced in this area and in this area again until that area has been overseeded by the continuous participation of algos who actually entered here as smart money, which had entered, and all these participants have entered into 172 area and broke price into the 151.80. So this market is obviously fighting here another potential resistance from that money on the smaller time frame. If the participation and profit taking on the upside continues, the next area where we're going to see participation from smart money on the short side, if market makes it there, it's not easy, but if market makes it there, it's going to become a great opportunity to keep shorting this market 161.54 to a target at 145.08. So as you can see, these moves have 1500 pips potential, so very important important moves here. Finally, euro versus Japanese yen. This market is actually moving as well laterally, and we saw the bears failing when this market came into this area, and the bulls also failed. In fact, they were not capable of supporting this price when price came into 122. Initially there was a reaction, and then the market just continued lower. So now that we saw this break, this market could actually has started a reaction after hitting this first target of this measured move here, 138 area, which broke price into the first target, and this market is also respecting the next measured move. In fact, we saw participation in the 117.88, which keeps pushing this price lower. Now, whether that level is retested or not, that's something different. When we look at the that money area on this model, we can see here that the weekly starting from last week has started pushing this price lower again, and this is in line with the participation that we saw from smart money at a much higher level here. As we can see, also previous participation in that area actually have pushed price lower. So one of the model is suggesting that this move lower here could continue, and the market quickly moved from the 4-hour value area here to the next daily value area, and that's where this market is at the moment. So the market could actually continue lower here. Okay, so this is it for this review. Thanks for watching, and if you have any question, you can always send me an email at fibstalker@gmail.com. Thanks for watching.